What are the specific economic indicators that will point at Japan's recent downturn? And how did they compare to previous periods of economic growth? Today, we're delving into a topic that's been making headlines: Japan's shocking economic decline. What's behind this sudden recession? Join us as we unpack the details of Japan's recent economic downturn and explore the factors contributing to this unexpected recession. From shifts in consumer behavior to global economic trends, we'll analyze the root causes and potential implications for Japan and the global economy. Whether you're interested in economics or just want to stay informed, this is for you. So, let's dive into this important discussion. When will Japan's economic decline end? On February 15, 2024, Japan received a sobering news. After over 50 years as the world's third-largest economy, the country had fallen behind Germany to fourth place based on 2023 GDP data. This symbolic changing of the guard signals Japan's ongoing struggle to reverse decades of economic stagnation and deflation in the face of demographic and structural headwinds. Japan's fall in rank can be directly attributed to the dynamic weakening of the yen over the past 2 years, which dropped nearly 20% against the dollar in 2022-2023. The sharp currency devaluation has eaten into Japan's exports overseas profits when converted back into yen. More broadly, the rise of China and other emerging Asian economies has chipped away at Japan's previous trends in manufacturing and exports. Meanwhile, Japan's economy faces strong structural drags, including an aging, shrinking population and strict barriers to immigration and foreign investments. Efforts to boost domestic consumption have sputtered as living costs outpace wage growth. The government thus has far struggled to implement impactful reforms to raise productivity, labor force participation among women, and total fertility rates. While Germany faces its own demographic and economic challenges currently, its larger working-age population and immigration inflows give it a more room to maneuver. Barring a major turnaround under new policy initiatives, most projections show India overtaking Japan as the third-largest economy by 2026, with no end in sight to Japan's decline down the GDP rankings. Has Japan's global economic influence already peaked? Japan's heydays as an unstoppable economic force globally was the 1970s through the late 1980s. Rapid industrialization and double-digit GDP growth rates earned predictions that Japan could overtake US as the world's largest economy. Japanese auto and consumer electronic companies led in global market share and innovation. However, Japan's twin asset and real estate bubbles burst around 1990, initiating 3 lost decades of economic stagnation and rolling recessions. China and other developing countries gradually claimed Japan's mantle as the dynamo of Asian manufacturing prowess and exports. Still, as recently as 2010, when China overtook Japan as the second-largest economy, Japan remained a formidable presence at number 3. Today, in 2024 though, the feeling is that Japan's glory years as an economic superpower are likely behind it for good. The rise of electric vehicles, automation, and artificial intelligence have disrupted one of Japan's last major competitive advantages in autos. Strict immigration policies and cultural barriers continue thwarting Japan's ability to attract global talent or fill huge labor shortages. Demographic destiny seems poised to shrink Japan's workforce and total GDP for foreseeable future. While Japan maintains strength in high-end manufacturing, robotics, and niche export industries, regaining broader global economic influence akin to its peak seems out of reach. Japan enjoyed a good run, but must now adapt expectations to its new stature as a second-tier economic power going forward. What policy responses has Japan's government taken? The sobering reality of Japan slipping not just into another recession, but also behind Germany to fourth-largest economy prompted immediate calls for action from Japanese leaders, declaring it imperative to pursue reforms. The Economy Revitalization Minister, Yoshitaka Shindo, outlined familiar proposals like deregulation to spur investment, supporting pay raises to drive consumption, increasing women's full-time workforce participation, and opening doors further for foreign workers. The subtext behind these ideas rests on the assumption that decades of malaise reflect not external factors, but rather self-imposed constraints that merely require political willpower to resolve. However, critics argue that shallow boosterism failed to diagnose the true depth of Japan's economic and demographic challenges. They contend that high-level appeals for reform lack specifics or momentum to manifest actual legislation. For example, promise to deploy all policy steps, to boost incomes remain vague without concrete action mandating equal pay standards or minimum wage hikes that companies are likely to oppose. Given a lengthy track record of political dysfunction and risk aversion on economic matters, few experts expect any major policy breakthroughs that could significantly move the needle on growth or competitiveness. Even recent fanfare regarding opening immigration doors wider to foreign workers still leaves Japan lagging far behind other developed nations in embracing talent mobility. Moreover, while government leaders target symptoms of economic illness, viable solutions to more systematic issues such as raising disastrously low birth rates or raise expanding immigration levels face political toxic barriers. Concerns over cultural disruption may need a wholesale reimagining of Japanese social architecture, a non-starter. As such, the menu of practical options available to truly arrest prolonged low growth and demographic decline appears quite limited for the government despite tough talk. More radical structural transformation seems necessary but relies on shifts in public mindsets beyond just policy tweaks. With stimulus plans hampered by already astronomical public debt and the Bank of Japan nearly exhausting unconventional monetary options like large-scale asset purchases, Japan has few macroeconomic tricks remaining up its sleeve. While tax incentives, public investments, and regulatory changes can marginally improve competitiveness, they fail to offset gathering headwinds of shrinking workforces and risk-averse corporate cultures adverse into innovation. As one economist noted, Japan has yet to craft an enduring growth model for the 21st century economy driven by service, digitization, and creativity. Its manufacturing DNA seems trapped in an aging body. In this context, the government's ability to conjure any dynamic economic rebirth appears highly circumscribed. Hoping instead for bland safety will at best stabilize descent rather than reverse trajectories. This implies Japan may need to accept its new stature as a second-tier power as the new normal rather than a temporary setback. While another slip in GDP rank the fifth largest behind India seems inevitable by 2026, philosophical acceptance of protracting stagnation remains a deeper challenge. Now, euphemisms about technical adjustments can ultimately obscure the reality of a proud nation that once aimed for the global apex, now resigned to middling status for the foreseeable future. What symbolic message does this ranking shift signal? Beyond direct economic impacts, Japan's displacement by Germany for third-largest economy also deals a psychological and reputational blow. Losing the crown to China in 2010 was disappointing, but understandably given that China's enormous population and breakneck growth, the rise of fellow Asian giant India also seems inevitable. However, conceding third place to a slow-growing, demographically challenged European nation makes it impossible for Japanese leaders to spin or justify the ranking shift. After all, Japan and Germany share numerous economic traits: lack of natural resources, aging workforces, reliance on exports, etc. Germany arguably faces larger structural issues currently with soaring energy costs, Russian embargoes, and labor shortages. Nonetheless, Germany has outperformed Japan by maintaining stronger global brand value, attracting immigrants to fill jobs, and driving domestic consumption. In contrast, Japan appears headed for not just lost decades, but lost generations for economic dynamism. This unfavorable comparison with a pure nation signals that Japanese dominance in technology, business, and soft power globally has markedly declined despite holding the third-place torch since 1968. Rather than temporary setback, Japan's falling GDP rank symbolizes deep stagnation that has become the new normal. Coming to grips with this reality and limited room for ascendance will be difficult for a nation's psyche that still remembers when number one seemed within reach. February 15, 2024 will go down as a symbolic turning point for Japan's modern economic history. The country slipped to fourth globally in GDP behind Germany, confirms Japan's multi-decade descent from a surging economic powerhouse to a nation struggling with persistent stagnation, deflationary pressure, and demographic decline. Barring dramatic political and cultural shifts, Japan appears poised to keep sliding down the GDP rankings as India and other emerging economies continue their march upward. While tactical policies can provide temporary relief, reversing the overall trend of lost dynamism and global footprint presents a Herculean task for Japan. Yet for a nation that built itself into a post-war behemoth through visionary thinking and perseverance, declaring decline as inevitable seems premature. If any country possesses the social tools to overcome supposed demographic destiny, it may be Japan. Whether political leaders and the Japanese people still retain the collective will and imagination to write a new economic chapter remains the pivotal unknown. We conclude our discussion on Japan's recent economic downturn. It's clear that this is a complex issue with far-reaching implications. If you found this exploration of economic trends and global impacts insightful and want to stay up to date with more discussions like this, please don't forget to hit that like button below and subscribe to our channel. Your support helps us continue bring you engaging content on the latest happenings in the world of economics and beyond. Feel free to share your thoughts and opinions in the comment section below. Thanks for watching, and until next time, stay informed